LiteFinance, the world of financial freedom.
Hello, today is already Tuesday in Vietnam, so let's start with the market forecast. As always, first is the calendar. So on Monday we already received the poor data from the Chinese economy. PMI data are on a positive to negative line, which is of level 50. In short form, PMIs above 50 level means that the economy is expanding, and below 50 means that the economy is contracting or shrinking. Apart from that, preliminary GDP data from the Eurozone, which shows a better than previous one expansion and just slightly less than consensus. As for China, this country has holidays all week, so the Asian sessions might be less volatile than usual. As for Tuesday, we will get a rate decision from RBA, which should start at a current level since there is no hints that they would do something with it at this moment. So the monetary policy statement will be most important for us. Later during the day, we will get manufacturing data from Germany, UK and US, unemployment change from Germany and Eurozone, as well as GDP data from Canada. During the night from Tuesday to Wednesday, employment and unemployment change from New Zealand. On Wednesday during the day we will have an OPEC meeting, inflation data from the Eurozone, ADP employment change and crude oil inventories. On Thursday, service PMIs from Germany, Eurozone and UK. Also UK's inflation report. And most importantly, interest rate decision, where most likely we will see 25 basis point rate hike up to 0.50%. On top of that, we will have another interest rate decision that day, this time from ECB. Yet it shouldn't bring any changes. The ECB rhetoric is clear, very dovish and as for ECB, we should focus on monetary policy statement. Later we will get the ISM non-manufacturing PMI from the US and one of the Fed's governor Bailey speech. Lastly, Friday, which is the first Friday of the month, and it means that we will get NFPs from the US and data about labor market in Canada. Based on the calendar and current rhetoric of particular central banks and what we have on the charts, we can assume that we could try, for example, to go long on euro against, for example, Swiss franc, because ECB is dovish, which might be a good for euro. No action from the central bank is a good thing for the market. Plus we have good PMI data from Germany, plus the situation on the chart looks like we have this inverted head and shoulders, which we already broke today. So look for opportunities on small pullbacks. Next is Euro-Yen, where we might have a harmonic pattern with the D point on 78.6 retracement level. Right now we broke through this small consolidation and the price starts to go up. As for equity markets, last time I was explaining why this first half of the year will be volatile, and if you have long-term investments, you need to stick to them and not sell anything. Even prepare more money for upcoming occasions. Today I want to tell you about something called the leading economic indicator, which consists of data like profit margins of the companies, bond yield curve, PMIs and so on. Its task is to forecast whether the recession is coming or not. And it might surprise you, but for December it showed that the economy will expand. Here I'll show you a very similar index which can showcase you the situation. If the line is flat or rising, it means that there is no way we will have a recession. This is a leading indicator, so it sort of predicts what will happen. Even Reuters wrote about that recently, but apparently nobody was interested in that. So with that said, I'm ending this video now. Thank you for watching and till next time, guys.